Good morning. Welcome to Morning Call. I'm Lata Venkatesh and with me is Sonia Shenoy in the Mumbai studio and Anuj Singhal joining us from Delhi. Well, it does look like after that a fair amount of green that we saw yesterday, thanks to the Chinese rate cut, the US jobs data, the markets today are in a state of wait and watch. The global markets are not giving us any gung-ho cues.
Okay, hi Lata, morning. What are the cues that you would watch for? Of course, all eyes will be on CPI, and if there is relief on that front, then that could be a big trigger for the markets. The monsoon front as well, there's some amount of good cheer, at least from private forecasters. But what should one look forward to today?
Well, in the first place, the global cues are actually positive for us. While the US markets appear to be, have found their range, especially if you look at the euro-dollar. We saw the euro go all the way to 1.05 and then hit 1.13. Now it has shied away from there, to 1.11. There is always an excuse, and this time it is Greece. But the key point is that means the dollar index surges and crude gets away from that $68 mark. So net, the strength of the dollar index at the moment actually favors India, because it means that crude has moved away, and my sense is that's why you got that positive FII number, because it does look like for the moment crude will not go towards that $70-75 mark, which one feared mid last week, the way crude was surging. So that the global setup actually looks positive for India. But as you said, it's the domestic cues. Before we come to monsoon and CPI, I think the big domestic cue we are getting from the legislature is that the GST and the land bill are stuck. The land bill in all probability is going to be referred to a joint committee, and I think that was some time coming. We could see it in the past 2-3 weeks that the land bill is not going to see the light of day in this session either, and the ordinance will be re-promulgated. On GST, there was more hope that somehow the government will be able to work the numbers in the Rajya Sabha. They've already passed it in the Lok Sabha, and that was a big deal. So, if the Congress walked out and if the rest of the members didn't oppose, then you could have 2/3 present and voting supporting the bill. But now it does look like it's going to be referred to a select committee, and then you don't know. The select committee might recommend amendments, in which case it has to be once again passed to the Lok Sabha. So for me, the bad news from yesterday was that not that the land bill is stuck, which it appeared to be for some time now, but the GST is stuck. So now April 2016 is not happening. That is for sure. That is a negative which we have to take on board. The black money bill has been passed, and that's important. We will have to see how effective it will be, and we will get to know. So far, government efforts at bearding and black money have not been very successful, so people will be skeptical. We will have to see how that works, but that is still a positive. The bigger positive is the MAT issue. Now, clearly the government says they will not issue any more fresh notices, except for time-barred cases. So it's such a climb down, it's not funny. It was an uncalled for controversy, but in any case, that will be also taken as a positive. So domestic cues, mixed bag. I guess MAT is a positive, but GST is a big negative. And I don't think the markets will want to take too many long positions ahead of the CPI data as well. If it comes with a 4 point something, our poll says 5.05. If it comes as 4.95,
so
there's only 10 basis points below the consensus. And for the past 3 months, we have been getting inflation data a good 5-10 basis points below our own poll. So, the surprise is on the pleasanter side. If that happens, then the market is definitely firing up tomorrow. But today, I don't think the market will want to take any risk on that front.
All right, so we'll await more details on that data. But Anuj, hi, morning. It's been a 900-point rally on the Sensex in the last 2 days. However, it was disappointing to see that there was not much FII backing in the rally that we saw yesterday. How did you read into the internals?
Indeed, Sonia, morning. And we were discussing this in closing bell yesterday that don't expect a large FII number because the cash market volumes were so low. From the low, in fact, the Sensex is now rallied 1,000 points, Sonia. But look, I was looking at the delivery-based data. There were only 2 stocks where you saw delivery-based buying: HDFC and Sun Pharma. And look at the top gainer yesterday, Bank of Baroda. It only had 10% delivery volumes yesterday. So the sense is that the short covering bounce is done. If the market moves on even from here on, then you just can't say that it was short covering. Then you'll have to say that, okay, the market maybe made a bit of a bottom and is now seeing a bit of buying. So that's something that we'll find out over the next 3 or 4 days. If the Nifty takes out, say, 8450 or so. 8450 is now seen as the next key resistance mark, because technically that also represents about 40 to 50% retracement of the lost ground. That is where the Nifty normally struggles if it is a counter trend rally. For the bulls, it's important to hold that 80 to 86 mark. That's a 200-day moving average. Today, it will be crucial to hold that and not fall below that. The other thing is what's happening from the FI data. Yesterday, there was cash market buying, a bit only, about 170 crore. But if you take a look at what's happening in the options side, and that's something that I've been reading for the last couple of days, the India VIX is just not falling. It's not the fall in India VIX is not concurrent with the kind of rise that we have seen. It's not in line. The India VIX yesterday was also down only 2.5%. Why is that? That's because at every rally, there's heavy put buying that's taking place. Yesterday also, FIs net bought about close to 1,000 crores in index options, and most of that was from 8,000 to 8,200 puts. All these puts added a lot of open interest. In layman terms, it means that when the market rallies, you want to buy some of these options, put options, because you believe that the market is going to fall. I think the other point is, and just to carry forward Lata's point on CPI, and not too many people taking positions on that. My point is that last time when we had a rate cut, the market actually topped out, and there's only one or two more rate cuts maybe now left in the system. So even if the CPI data is really good, you really have to then think that what would that mean in terms of further rate cuts, and would that mean that the last of the rate cuts is actually also out of the system? So that's something that a lot of people here in Delhi are talking about. But I'm sure that Lata is a bigger expert on that. But the sense I get when I talk to a lot of people here is that rate cut as an incremental trigger may not have too much value for the market from here on.
No, actually, Anuj, even last time around after March 4th, when the cut happened, there were enough people telling us the rate trade is over. I mean, the buying of, say, banking stocks or NBFCs or interest rate related stocks, interest rate impacted stocks, was over in March itself. Now, even if there is one rate cut, it's either there is definitely one perhaps in June or in August. That's the best guess. That's not going to make a very big difference to the economy. So I take your point that the rate trade was already over, and hence its impact on the markets will not be very great. Nevertheless, for the day, the impact can be very significant. So tomorrow, people may not want to play the bank trade today to the extent they have played it all these days. I just want to ask you one more thing, Anuj. I take your point entirely that this looks like more a short covering rally, that this has not been backed by delivery-based buying, not even too much of FII buying. I mean, in fact, net, if you took the selling on Friday and the buying numbers of Monday, Tuesday, you still have a negative FII number. You just have minor positives. Considering all that and the high VIX, where do you think the resistance comes? At least we had a positive that the Nifty ended at the highest point yesterday. So is there some climb up to 8,400 and resistance kicks in later? At least we're assured of a gap up, and today's long trade is safe?
Today, the sense you get is that if indeed this was a short covering bounce, and the answer to that will come to know over the next 5 or 6 days, or maybe more with the benefit of hindsight. If indeed this was a powerful short covering bounce, then it would not have legs beyond 84.50. 84.50 is the level that I am watching out for, both in terms of the kind of options positions that we have and the kind of technical charts that are formed. So if over the next 2 or 3 days the Nifty is able to take out 84.50, in that case, you'll have to say that, look, the market made a durable bottom, that panic bottom at around 8,000 and moved on. Otherwise, I mean, there's a good chance that the market has a bit of a time consolidation between, say, 8,400 all the way down to, say, 8,100 or 8,000, and then we'll take, market levels forward. But for me, really the level to watch is 84.50. I mean, you could extend that by another 20-30 points, say between 84.50 to 8,500. But if the Nifty is able to take that out with a bit of delivery-based buying, then you'll have to say that really, the market is ready to move on.
Okay. So I guess some kind of a moving away from the $65 mark towards $60 on crude and a good CPI number can continue perhaps the good run for the Indian markets. But that is too many ifs.
All right.